Hello everyone, it is June 16th, 2019, 1:14 p.m. here in New York City. First of all, I'd like to say happy Father's Day to everybody. And in this video, we're going to be analyzing SPY, that's the S&P 500 ETF, QQQ, that's the Nasdaq 100 ETF, and DIA, Dow Jones Industrial Average ETF. And then we're going to analyze GC, that's the gold futures, CL, that's crude oil futures. Okay, let's get started. So first up, we have SPY, that's S&P 500 ETF. So basically, last week, it's pretty much, what you call it, a flat trading week. At the end of the day, if you look at what's going on last week, pretty much at the end of the week, the market did not make too much of a up and down movement. Okay, but however, if you look at we use the Pendragon 3-step. Step number 1, we're going to look at the signals and trends. So we're going to look for all these, all the long signals on a monthly chart still intact, and the long signal on the weekly chart still intact. Only thing different is that we now have short signal on the daily chart. Okay, so the market did try to go down a little bit and go back up. So usually when this case happened, what happened is that since it's already been 3 trading days passed since the short signal. Usually when the signals happen, the market should make movement, in the direction of the signal relatively quickly. And if already 3 sessions passed and not much significant movement is going on, perhaps the signal is not as good as it is. So what I would do is tighten up the stop, or even get out at least half, or get out altogether and put my capital to some other use. Because after all, don't forget, the general trend is still toward the upside. Okay, and if the market break out above the previous pivot high, that's around here. Let's see, what price was that? That would be around 241, let's say 0.41, 241.41. Then, another new trend will continue. And as mentioned before, previous week video, right now, the market, that's step number 2. The price is above all 3 lines now. So this is still considered a very strong market, okay, for the markets. Now, step number 3, we're going to consolidate prices to find out where this potentially strong support might be. So let's see, any numbers that are fairly close to each other that we can see. Well, at 283.23, 283.44. So that could be a potential support. Okay. All right, that could be a strong potential strong support. Another level I will look out, watch out for is this 275.16 level and this 274.80. Okay, they're fairly close to each other. And this 273.74, that's almost a 274. So that would be your next strong support. So basically, what's going to happen is that for next week, okay, because usually when it's above the all 3 lines, the market does not remain in a trading range for too long. Either you'll break up to the upside, continuous up move, maybe challenging all-time high, or the market could break down and challenging the support, testing the support, and see what happens. All right, so you already have the support number, so you know what to do when these things happens. Now, what we're gonna do right now is look at QQQ. QQQ, that's the Nasdaq 100. The logic is similar. Okay, same thing. You see on the daily chart, we had a short signal right here. Only thing different are the price levels. Okay, so since this is a video, you guys can always pause. And I know some of you trade based off my numbers. You can pause the thing and look at the significant numbers and look at these numbers. They're fairly close. Okay, the 180.96. So you can so there's no need to go into the logic. It's the same thing as SPY. I'm just gonna go through these charts real quickly. You guys can pause it, jot down the numbers, and do it yourself. By the way, by now, if you watch the previous few videos, the moment I punch up the charts, you just follow the 3 steps. You should be able to make the decision on your own relatively quickly. Okay, or if you're getting my price tables, okay, you can just look at the price tables and the current price, and you know how to do it. It's a matter of seconds. You should be able to decipher the market and come up with your own trading plan. All right, so that's QQQ. So third one I'm going to look at is DIA. That's the Dow Jones Industrial Average ETF. Okay, again, logic is similar. Okay, on the daily chart, you have this short signal occurring here. Only thing different is the price level. You guys can, again, you can pause it and try to look for your own significant level. All right, right away stands out 256.76, 256.80. That's going to be a significant support level for the DIA, for the Dow Jones Industrial Average. Okay, so now let's go on to gold. Gold is something quite interesting. Okay, so step number one, look for the trends and trends and signals. On the monthly chart, we have confirmed a short signal way back in let's see, that's back in March of this year. But because this month's actually took out the previous high. Well, first of all, the short signal did work out because the gold market did drop, the next 2 months after that until it touched this green line right here. Everybody see it? Touch this green line right here and it bounced off that. Okay, so you see these lines, how well these lines work. But currently in June, it took out the previous high, so that means the short signal is already invalidated. In fact, you should have taken your profit already, using these lines as guide. So now we are kind of in a transition period on the monthly chart. Now on the weekly chart, obviously we have an uptrend alert, right? This up right here, the blue cross. And on the daily chart, we have uptrend alert. So right now, 2 out of 3, showing on the charts, it's an uptrend for gold. And then the next step is a relative position of the price to the 3 lines. On the monthly chart, it barely cracked above all 3 lines. So that's a very bullish sign. On the weekly chart, it's above the 3 lines. And notice that this week, if you pull up this chart this week, the low for this trading week was 1323.6. Let me write that down. That was the low for the week. Okay. And the purple line was 1327.1. 1327.1. Okay. The purple line was, let me get a better color. How's that? Okay. The purple line was 1327.1. So they are only different. They're off only by how much? 3.5. And if you use that as 1327.1 as your support level, as your entry point on the long side, okay, you could totally do that. And the high this week was 1362. Okay, that is let's see, that's a 35 point to the upside. Or even it closed at 1344. You're still up a good like what, 17 of no, I'm sorry, 1344. A good 17 points. All right, so that's the usefulness of these price charts. Now, so the next thing we gotta so gold, obviously it's quite strong right now. Okay, and the third thing we gotta look for is for the price that are very close. So right off the bat on the weekly chart, you can already see this 1323 level, 1325 level is gonna be quite strong because on the weekly chart the number pretty much bunched up together. That's your very first. That's going to be very first potential strong support level. Okay. Obviously, you have 1338.15 on the daily chart, but that's all by itself. That's its own, first potential support level. Okay. So if gold does pull back, that could be the level. Okay, that's a first level for your possible re-entry or getting in. But if not, continue higher because it's above all 3 lines now. We can now enter another. Watch out for another leg up. Potential leg, especially on the monthly chart. Remember, it just cracked above all 3 lines. If this really gonna go up, okay, this might be finally, a leg up for gold, or maybe a breakout for gold. Okay, so that's something for us to bear in mind and pay attention to. All right. Finally, let's look at crude oil, CL. Crude oil. Crude oil is actually very interesting. Okay, so follow the 3-step system. Step number 1, look for trends and signals. So on the monthly chart, we have a downtrend. Right, downtrend alert, DN for downtrend alert. And on the weekly chart, yeah, it was uptrend and then and turning to a downtrend last week. Okay, so 2 downtrends now. Now on a daily trend, now we have 3 downtrend. So crude oil, based on the chart, is signaling us downtrend on all 3 time frames. All right. Step number 2, where is the current price trading in relation to the 3 lines? All right. On the monthly chart, below all 3 lines, bearish sign. On the weekly chart, again, below all 3 lines. All right. Now on the daily chart, again, below all 3 lines. In fact, remember we mentioned this, when it's below 3 lines, there's a possibility for strong down move. That's exactly what happened on the weekly chart. See, back here, when it cracked below all 3 lines, crude oil just dropped. Okay. On the daily chart, back, then when it dropped below all 3 lines, another leg down. All right, so crude oil is pretty bearish. Now, third, we're gonna look for price levels. So right off the bat, again, weekly chart similar to gold. These 2 numbers are very close together. So 59.33 level on the weekly chart. Okay, that's gonna be actually resistance. That's on the upside. Okay, so that's still quite a little bit far away from right now. So let's try to look for something closer to it. 53.18, that's going to be your first potential resistance on the daily chart, but the number is all alone by itself. Now, 55.66, let's see what happened. Okay, this number could line up with this 55.22. All right, so around 55.22, 55.66, that could be your potential strong resistance if crude oil is to rebound. Now, the reason I say crude oil is kind of interesting is that for those of you who's been watching the world event unfold, we know that there were 2 oil tankers that was under attack just a little short while ago. And yet, despite all that, okay, crude oil still the price still went down. So, and the reason it's going down, this is purely from a technical analysis point of view. However, we cannot ignore the world, the fundamental, the world events inputs into the price actions. So now we have something very interesting now. There's something bear watching, okay? Because there's always been a debate. Does the world event fundamental drives the price action, or does the chart, the price action, the technical drives the fundamental news? That's been a debate as old as when there are fundamental analysis versus technical analysis. So right now on the technical analysis, the chart showing bearish. Okay, so let's watch the world event and see what happens. See if any further escalation or further exogenous events that happen to the oil market. And that is just something for us to bear in mind. So right now you have all these charts, all these numbers, for these products. So for something interesting, I will pay attention to the crude oil market. All right. And obviously, actually, all 3 markets quite interesting. S&P, the market index, right now we're kind of in a holding pattern. But I think next week we're going to get some resolution, whether it's from the Fed or the G20 meeting or event happening in Asia or, in the Middle East or what have you. All right. Okay. That concludes this video. I wish everybody have a great week and trade with passion and discipline. I will see you next time. Take care and bye-bye.